It's March 17th, 2014, current time 10:48 GMT. Jay Mize from GBI Forex here with the daily Forex trading outlook from global-view.com. Before I go on, I think we should discuss what's going on globally on the political front. We had Crimea vote overwhelmingly to secede and join Russia. So far, it's been met by markets with sort of a relief rally, but there's been no violence associated with it. That's seen dollar yen pop off last week's low, which came in just above the low I had pointed out at 101.16, 17, that area there. We came very close to it. We didn't break it. We're back up here now in the right now 101.84. Key levels are the 120 and 50-day moving averages above 102, and 102 being a pivotal level on the upside. But within 101 and 102, 101.50 will set its tone. As far as the global events, we have to watch what happens next with both the U.S. and EU threatening sanctions. The history of Europe is that they don't go far enough on these type of things, but they don't want to hurt their pocketbook. In this case, it's exacerbated by the fact that Europe is dependent on, especially Germany, from imports of energy from Russia. So it's really a matter of kind of a mini Cold War. Do we react? Do they react back? And back and forth, and how far does this escalate? So that'll determine how much risk aversion there is in the market. One word about sanctions, etc. It used to be in the old days that if you mentioned or instituted freezing of assets, which is being threatened right now, it was negative for a currency. In this case, I'm not saying it's going to be negative short run, but over the long run, it just intensifies the reinforces the diversification process where central banks do not want to put all their eggs in one basket. And this is one reason why if your assets can be frozen. So it's kind of a dangerous weapon to use. Whether the U.S. uses it or not will be interesting. Backs are kind of against the wall, Obama at least, as he's threatened sanctions, so he's got to follow through on some forth. These political events usually don't last for a long time. This one could drag out if we have sanctions. So although we have some relief today, there's still event risk that this could escalate, and we will see what happens. As far as the euro dollar goes, it's been 4 days that it's traded on the other side of 139. It's not one of my major levels, but when you get around the big figure like that, the longer it goes on, the bigger chance of a directional move. Once it's broken, on the downside, there's support. 138.31 would be last week's low. It's key support. And then you have these higher lows here at 131.43, 47. So make it 131.30 to 50 on the downside, along with the former breakout level 138.25. On the upside, Friday's high was 139.37, and ahead of that, after that was 139.67. So if we stay between 138.50 and 139.50, probably not going to run into too many stops, and we will trade either side of 139, which will set the tone until either side is established. We look toppish here, but once again, we've been down this road before, and we will see how this plays out. But 140 is a pivotal level on top, 138 on the bottom. That's going to set your next real directional move, whether that'll be set by also by how 139 trades. If we look for this week ahead, we have the Fed meeting on Wednesday might be the key event. Look for it to find a way out of being tied to the unemployment rate, a la the Bank of England, with some sort of qualitative measures to determine when the Fed starts to tighten. Right now, it's on its taper mode. Markets looking for better data after the harsh winter weather here, so you probably can get better data down the road. And as far as Europe goes, as I've written before, it's not what they say, but what they do. And you saw a lot of damage control last week after the ECB meeting, with even Draghi hinting of some currency concern, and that took the euro off its perch. But once again, it's what they do and not what they say, although the market reacts to what they say as much as what they do. And that's where we are right now. As far as the euro dollar goes, you also look here You got the 20-day moving average and the key trend line are below 138, and that's why 138 is so important. If you look at the 4-hour chart, that 138 and a quarter was the breakout level. Look at the 1-hour chart. You got 139.16 here, 139.37. The high overnight was 139.11. The downside, we have 138.78 was the overnight low, but then the key levels I said are 138.30.50. So we have a little bit of data coming out from the U.S. today, but the key events are going to be what happens in Russia. And although the market's taking a breather now, there's still a chance of some risk aversion setting in if the quote mini Cold War heats up once the U.S. and Europe show their reaction. So for now, it's a typical Monday, a cautious Monday. Europe's going to trade around 139 until one or the other side is established. A dollar yen would have to take out 102 to establish a better tone on the downside. Below 101.50 will make a run at that 101.17 or 16 level or so. So 101.50, the figure's kind of a no man's land with a slightly better bid for the euro, for the dollar yen, and euro dollar between 139.850 and the 139.50 is not near the key levels at 138.31 to 139.67. So typical Monday. Watch the headlines and stay tuned as this market plays out. One more question. You'll see a link at the bottom of this video. It's embedded. It's clickable. Please click on it. This article is worth a read, and it'll give you some insights that you might not find elsewhere. So click on this link.